If you include the after hours moves, GME is up over 240% on the day. I'm telling you what I'm doing now. Here we go again. What's going on, everybody? My name is Matthew. Welcome back to my channel, and today we are talking all things GME and my plan for how to navigate this situation. Right off the bat, why did this spike in price just happen? Well, first of all, you have Deep Effin Value saying that he still likes the stock based on fundamentals at the time of his testimony when GME was still in the $40 range. So you basically have the ringleader for Wall Street Bets giving his blessing on the stock at this $40 range. And yeah, I'd consider his opinion pretty influential nowadays. But keep in mind, the stock is already 3x'd since he said he liked the stock, so much of the upside that he saw may be already gone. But what sent it up today towards the end of market close and even higher after hours? Well, it looks like the CFO of GameStop, Jim Bell, was ousted out of his position to make way for an executive more in line with the vision of Ryan Cohen. Now, personally, I haven't done extensive fundamental analysis on GME, but it seems like investors think this is a positive catalyst for the company moving forward as they begin to try and compete with the likes of Amazon. Now, perhaps this is a good long-term investment, but a move this extreme, going up over 200% in a day, is probably not based on fundamentals. It's likely more based on momentum, algorithms, and maybe even some market mechanics. And the average retail investor, such as myself, has low visibility to these algorithms, most likely, and probably has a hard time or doesn't fully understand some of the market mechanics at play. And that lack of visibility of what's really moving the price, at least for me, makes it super risky. And as I stated earlier in my other video about GME, there are funds on both sides of this trade. Sure enough, after the first surge on this stock, it was later revealed that hedge funds were making hundreds of millions while they were on the retailer's side. And it's my belief that these hedge funds probably have more of a say of when the party's over than we do. And what makes this even riskier is what we may not expect. I'm sure many market veterans saw the broker restrictions coming the last time this happened, but retail investors such as myself, again, may not have seen this coming. And this again goes back to the idea of understanding the market mechanics behind this trade or investment. So who knows, if GameStop does continue to rise and goes crazy again, what else could we see? Maybe there's another form of restriction on one way or another, and we may not have a say in that. And you may not want to hear this, but I think the most important thing is being honest with yourself, whether it's this trade or investing in general. Money that you're willing to lose is still money at the end of the day. Beware of echo chambers and confirmation bias, which is why I'm trying to make this video and bring it to the stage, because I want to provide a new perspective. But if I can take off my serious YouTube hat for a second, congrats to anyone who's been able to make some gains from this. And it's pretty incredible what we're seeing. I mean, I've never seen anything like this, and it's probably going to be in history books. But back to the serious stuff. They say Jeff Bezos once asked Warren Buffett, "Your strategy is so simple and it works so well, why doesn't everyone just copy you?" And Warren Buffett replied saying, "You should hit the like button if you haven't already." Oh wait, no, it's because not everyone wants to get rich slowly. And again, perhaps it is a good investment, but why not just wait a little bit and make a decision when things are probably a little bit less emotional and volatile? On that note, what are the opportunities I see? Well, this photo right here is actually the perfect example of the opportunity for a long-term investor. Last time GME rocketed, we saw a lot of red in the rest of the market while meme stocks were green. My suspicion is that retail investors were selling quality names to buy memes, and funds were selling out of quality long-term stocks to cover their short positions. If something like this were to happen again, a short-term reason for long-term stocks to be lower, especially after the recent dip, I personally would want at least a little bit of cash to be able to take advantage of that situation. But who knows, things may be more tame this time around, so maybe we won't get this opportunity, but it's definitely something to keep an eye on. I actually just posted a video yesterday about how to successfully buy during a stock market dip, and in that I suggest having a list of stocks that you would definitely want to buy on any big red days. And on that list, when there's a red day, that's the first place I'll go to see if they've reached a more reasonable valuation, and I always kind of have a price in mind of what I would like them to hit before I consider buying in. And even if there is no red and this whole thing blows over again, I think that's definitely a list that everyone should have no matter what's going on in the market. Maybe a dip list or a red day list or whatever you want to call it. Anyways, I hope this video was helpful. I'm trying to do these maybe more frequent kind of current events sort of style videos, and let me know if you like them on this channel or if they're providing any value to you. If they are, make sure to hit that like button, subscribe, and check out a quote of the day. You might just learn something. Make sure to follow me on Instagram for daily posts about my portfolio, stocks I'm watching, and all that good stuff. And check me out on Clubhouse as well. Still learning about this platform, but I think it's pretty interesting. If you're watching at this point in the video, you are the real MVP. Don't forget your peace and thank yous.